In general, I think that, Bitcoin is bona fide and, clearly under the CFTC's remit based on previous administrations and the sort of, regulatory seats and sort of things that they've said. And so Bitcoin is very clearly a commodity. I think ETH, is also very similar in that regard. But a lot of the things that are built on top of Ethereum and Solana stand to benefit, and maybe things like Hyperliquid and Lighter and others stand to benefit from the Clarity Act and the increased clarity in the ecosystem. I think that, you know, it's nebulous, how certain things are regulated, what is security, what is a broker, and the Clarity Act brings transparency and clarity to those areas. And so I do think that Ethereum and Solana ecosystems, Hyperliquid, have a lot to gain from this act, the statute going through. And it's very interesting to see how the market will react to that. I mean, you've seen in recent days that on a 7-day time frame, Ethereum is up almost 1%, and Bitcoin is roughly up 0.5%.
Hi, everyone. Welcome to another episode of Bits and Bips, the interview. My name is Steve Ehrlich. I'm the head of research at SharpLink, and as always, your host. Got a lot to talk about today. Clarity is hitting the final stages. We got to see if it's going to get over the finish line. And there's a lot of volatility in markets as traders try to hedge / take advantage of what may or may not happen. We're going to get into all of it. But before we do, as always, just a little bit of housekeeping. Nothing that you see or hear on this program is financial or investment advice. For full disclosures, please see unchainedcrypto.com/bits and bips. Also, second, I want to let you know that Bits and Bips now has its own channels separate from Unchained. So if you are not subscribed on these channels, you're going to stop seeing these episodes. Don't miss out on hearing the sharpest takes in crypto on how our two industries are colliding. So make sure that you subscribe and follow us on YouTube and YouTube X, all regular platforms from where you can get our podcasts. And finally, before we dive in, let's hear from one of our sponsors.
This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained. Heads up, everyone. We've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained. No more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right, welcome back. So very pleased to bring in my guest for today, Cole Kennelly. Cole is the CEO and founder of Volmex Labs, an analytics firm that provides some of the key indicators of sort of how traders are pricing market volatility. So welcome, Cole.
Hey, Steve. Great to be here. Thanks for having me.
Yeah, absolutely. And this is a great week to have you because of all the volatility that I mentioned before in my initial remarks. But before we get into sort of what you're seeing on your platform, I'd like for you to just briefly give like the 1 or 2 minute overview of your company and in particular the products that you provide.
Yeah. So we build Volmex Labs. We have created the BVIV Index, the BVIV-US Index, and the EVIV Index, which are 3 flagship indices. Really, we're a benchmark index company. We provide financial benchmark indices. We license them to the likes of Polymarket, Bitfinex, TradingView, Bloomberg Terminal, and others soon. And essentially, our flagship product is a volatility index that measures the 30-day implied volatility of the Bitcoin market, or the IBIT market in the case of BVIV-US. BVIV is the most longest running, ubiquitous, widely adopted standard for this type of product. We have many other families of indices that are live today and coming soon. And essentially, we've built the Bitcoin Volatility Index standard for the digital assets crypto market.
So I think to kind of summarize what you said, people look at your indices and then they try to understand like how traders are, what level of volatility they're expecting over certain durations. I know that you have different timelines. It's not necessarily an indicator of which direction the market's going to go, but it does give you a sense of how wide, or how widely they expect the market to move over a certain period of time. Is that correct?
Essentially, BVIV is a measure of implied volatility for Bitcoin, meaning the forward-looking moves, the forward-looking risk in the digital assets Bitcoin market. And so largely it's associated with negative shocks to the market. When the market is fearful, BVIV tends to always spike. It's very persistently negatively correlated in times of fear, but can also go up in times of greed. And so it's a very versatile product, which provides this robust and mission critical measure of the market's expectation for volatility.
Yeah, it's kind of funny. I mean, I used to back when I was at Forbes, I think I did a story on Deribit's implied volatility products, and was kind of looking for some of those correlations between like traditional market moves, like not only in crypto, but then also as it relates to like the S&P, et cetera. I mean, I'm sure you're familiar with the term short the VIX, and anyone in TradFi listening here knows what that means. And I was curious to see what types of correlations there were there. And at the time, this was a few years ago, I didn't actually see a lot of it, but I guess today things are much more mature. I mean, this may have even been before ETFs had been approved. Things are a lot more correlated. So I'm interested to kind of see that, and it's all based on like the price of the options to kind of hedge. That's where like the implied aspect of the name comes from. So let's dive into what you're actually seeing in the market, because a lot of people are wondering, like, how do I try to, I guess, position for the upside if clarity does pass, but protect my downside? And there's a lot happening as we roll into these next couple of crucial weeks. Bitcoin, ETH, Sol, I mean, they have all bounced off of recent lows and have had a couple of good weeks. But again, now we're running into a lot of different factors. I mean, there's clarity. There's price of oil going back again above $100 a barrel. The ECB decided to keep rates the same today, but the FOMC is meeting next week. And while the Fed's being tight-lipped, it's hard to anticipate what the Fed's going to do. And futures traders are pricing in, I think, 1 or even 2 rate hikes this year. So what are you seeing across your platform?
Yeah, it's really interesting time in the market. Zooming out, there's definitely a very strong institutional demand for blockchain tokenization as infrastructure. I think, the Bitcoin price is a little bit, subdued at the moment, but that surely will come back, in my opinion. Essentially, we have built the BVIV index, which our canonical sort of, flagship index is a 30-day tenor. We have the only Bitcoin volatility index term structure in the market. And so you can look at the expectation for the market over the coming 1 day, 7 day, 14 day, 60, 90, 180, and, different, sort of, things happening in the market can be visible in this term structure. We show it on our website, charts.volmexfinance/BVIV, or search for BVIV on the Volmex website. Essentially, we've noticed a slightly elevated, volatility index for the 14-day in the term structure. And, this could be due to the Clarity Act, being either imminent or different developments coming. There was also some call buying activity last week in the options market for a 2 to 4 week, sort of out, calls. And so there seems to be some, ramping expectations for the Clarity Act in the coming weeks. I mean, obviously, we both hope that happens. That would be tremendous, tremendously positive advancement for the industry. But yeah, there's a slight elevation in the BVIV 14-day index, or between the 7 and 14 day. And, we're looking forward to the Clarity Act hopefully coming to market. I know there's been a lot of folks on the Hill putting in a lot of work related to this, and that will create a lot of, clarity and reduce the nebulous nature of some of the things that are, maybe holding back tokens and, the industry broadly.
Yeah, maybe if we could, let's dive a little bit more into the indices that you mentioned, and even if you need a moment to just kind of pull them up on your screen, I'd love to kind of get a sense of where they're at, and like where the current levels of volatility fit within the historical timeline. Is this a period of time where we're seeing a lot of expected vol, or I would imagine it's not going to rise up to like pure fear and panic when like FTX collapsed or something like that. But like how, like what's the historical context for where like maybe your Bitcoin and where your ETH and where your ETH indices are sitting?
Yeah, so essentially the BVIV index is currently at 41. It's actually come up and sort of seen a rise in the index value in terms of points and percentage gain in the last couple of weeks. And so on a relative basis, we show this metric called BVIV rank, BVIV percentile. BVIV rank is basically the, where it's at in terms of 52-week high and low. So generally, it's actually at quite a low point, but it was actually at close to the 9-month or 12-month low of sub 40. And in the last couple of days, Bitcoin has seen a rise, and then there's been some positive correlation between the BVIV index and the Bitcoin price rising. As mentioned, typically you see a very negative persistent correlation where market's fearful. On February 6th, Bitcoin went from 68K to 60K, and BVIV went from 40 to over 80 at its peak. You can also observe this different behavior in times of bullishness in the crypto market, where Bitcoin goes up and BVIV also goes up with it. So that's kind of what you saw in the last couple of days. Bitcoin was at 62, 63K, and then it popped to 66K. And so I think that's also interesting that Bitcoin rose perhaps on the excitement around clarity, or the prospect that clarity is imminent, and BVIV also kind of rose as a result of that. And so this is our website, charts.volmex finance. We have the term structure at the bottom of the page here. You can see how this has evolved over the last 1 to 2 weeks. And this is the slight elevation I mentioned, I guess between 14 and 30 day, and there's something between 7 and 14 day as well, where you can kind of observe this like kink in the term structure, where it's not just a smooth sort of typical vol term structure you'd expect. It's a little bit of a, there might be something that the market expects in the next 14 days, 30 days, 7 days. And so that's kind of how I look at it right now. And again, this is our platform that you can follow the indices on.
Okay. All right. I want to dive into this a little bit further, but before we do, let's take one more break to hear from another of our sponsors.
If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months. Heads up everyone, we've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right. So we were just talking about your BVIV index, but one thing I find really interesting is that you have one specifically related to options on IBIT, which should have very little delta vis-a-vis Bitcoin itself, but nature of financial products it does. I'm just curious, before we get into a couple of other assets, is there any interesting divergence between your IBIT product and BVIV? And if so, what might that mean?
So we have the BVIV index, as you mentioned, and the BVIV-US index. The BVIV index tracks the global spot options market, Deribit, OKX. It looks at these type of venues and kind of aggregates this, single number that, looks at the entire global options market. About 6 months ago, so BVIV is about 4 years old now. About 6 months ago, we rolled out the BVIV-US index on the back of the success for the IBIT options. And IBIT options launched at the end of 2024 in November and have quickly become, the dominant form factor for Bitcoin options in the US market. And so, the regulated ETF options market and the, offshore market are roughly the same size. They're both about 25 billion on any given day recently. And basically, you can observe that the BVIV index is a couple points below the BVIV-US index. This is largely attributed to, small premium for, really like transparency and like, the clearinghouse setup of the equity options exchanges in the US market. So you'll think BVIV-US is at 42 and BVIV's at 39, something like this. And so there is a small, premium on the sort of IBIT index. But largely the performance of the indices is very, very similar. And, it's something that we pay close attention to. We've published a lot of research on, the growth of the IBIT options market, and something we're tracking closely. It's a very interesting, to juxtapose the two markets and two indices.
Okay. And we spent a lot of time talking about Bitcoin, but as you mentioned in some of your earlier remarks, for every token has something at stake with the clarity negotiations, but I guess one could probably argue Bitcoin has the least, given that it's pretty settled as a commodity, and just sort of by design, its rigid nature. There's less like on-chain activity you can do with Bitcoin beyond just sending it back and forth. I want to kind of get your sense of what's happening with ETH, Solana, some of the other major ones where, aside from just perhaps getting a little bit of clarity on which regulator has primacy, there's a lot at stake, in particular for DeFi and some of the sort of activities that you can do on top of these multi-purpose blockchains. So are traders positioning themselves differently related to these for these tokens related to Bitcoin? What does your platform tell you?
In general, I think that, Bitcoin is bona fide and, clearly under the CFTC's remit based on previous administrations and the sort of, regulatory seats and sort of things that they've said. And so Bitcoin is very clearly a commodity. I think ETH, is also very similar in that regard. But a lot of the things that are built on top of Ethereum and Solana stand to benefit, and maybe things like Hyperliquid and Lighter and others stand to benefit from the Clarity Act and the increased clarity in the ecosystem. I think that, it's nebulous, how certain things are regulated. What is, security, what is a broker, and the Clarity Act brings transparency and clarity to those areas. And so I do think that, Ethereum and Solana ecosystems, Hyperliquid, have a lot to gain from this act, the statute going through. And, it's very interesting to see how the market will react to that. I mean, you've seen in recent days that on a 7-day time frame, Ethereum is up almost 1%, and Bitcoin is roughly up 0.5%. So this might be indicative of the fact that, Ethereum and other smart contract platforms, as well as other, decentralized applications and exchanges, have a lot to gain from the Clarity Act going through. So you might see this in the EVIV index. If I look real quick, the EVIV index is up, around the same amount of percentage points and as BVIV, but you can definitely see this in the Ethereum price and the Sol price and the Hype price. So it's going to be interesting to see how, the broader market reacts to, clarity going through and the prospect of it going through.
What is the longest term duration of contracts that your index tracks?
It is 180 days. but we should roll out a 360. That would be cool.
Okay. All right. So, I mean, that pretty much gets us to the end of the year, which is where I kind of wanted to take this next. I was looking a little bit at oil futures before we went on. And again, it's a very, I say this, I feel like I say this a lot on the show, but there's many different ways to look at the world. I mean, for one, rates are hiking across like 2 years, 10 years. Bonds are suffering. Traders are anticipating rate hikes across the world over fears that the Iran conflict, which is now, I guess, moved from the Strait of Hormuz into also the Red Sea and what all that means. People are bracing for a rough couple of months. But oil futures tied towards the end of the year are actually relatively muted and not too far up from sort of where they sit today. And I'm wondering what crypto's telling you when the end of the year. Like, do we see a big run up into the 100K? And I know you don't look at particular price, but like, are crypto are your models predicting a lot of volatility between now and the end of the year? I would anticipate, given that we've been in a crypto winter and hopefully it's bottomed out, that if there is a lot of volatility, that would mean volatility to the upside, not the downside.
When I look at the term structure for BVIV, I don't observe anything that jumps out to me as, a elevation in the term structure as you might see with the clarity in the next couple of weeks. Although definitely I think that, by end of the year, crypto could look a lot different. Like I mentioned, there's a strong institutional appetite for tokenization, blockchain as infrastructure, stable coins right now. And then that could translate back into, the liquid majors, Solana, Ethereum, Bitcoin. And so I think it's, it's a very interesting, regime we're in right now, a very institutional regime. And I think that the market could look a lot different by end of the year. There's definitely a lot of appetite for, institutional pilots and everything right now. And nothing jumps out in the actual term structure for the BVIV index, but I know I've gut feeling, I think that the market could shape up a lot.
Okay. All right. Before we wrap, I want to talk a little bit about prediction markets. So you have a partnership with Polymarket. Could you just kind of walk me through the terms of that, please?
Essentially, Volmex and Polymarket have a collaboration. Our indices are available to trade on Polymarket. There's a monthly tenor, a yearly tenor, and essentially we're partnered, partner to Polymarket that makes, robust mission critical volatility index tradable in the prediction market format. And so it's been live for the last couple of months. Traders that would like to express a view on volatility increasing or decreasing can use these contracts to easily to hedge or speculate or other different strategies that are more, sophisticated. But essentially, Volmex indices are available to trade on polymarket.com. And, we're a big fan of the Polymarket platform and think they're doing important work making, derivatives more accessible and intuitive for, retail, pro-tail, and even institutional investors. So very excited about that. Right now, there's a BVIV and EVIV contract expiring in the next 8 days. And so something to pay attention to as the expiration is kind of a forcing function for price discovery.
Yeah. And I'm really curious too. I mean, if you're seeing anything kind of noteworthy on how those contracts are trading, we always, I've long looked at the CB Fed Watch tool and now it seems like Polymarket's markets for pricing sort of next Fed rate moves are sort of quoted side by side with CME. So I'd love to kind of hear how people are using that product. And in particular, I wonder too, like how just the rise of different things that you can bet on in relation to Polymarket, how that changes the way people use your product or how you might try to develop it in the future. I mean, I was just looking on Polymarket now and I mean, like you could look at bet on things like an Iran coup attempt. You could bet on things like a ceasefire. You can bet on prices that I mean change minute by minute. There's a lot of different ways. I mean, you could bet on clarity. I mean, there's lots of different ways to express views on things that are related to just price volatility. So yeah, I mean, how does that impact the way people are using your product? And I'm really curious too, just further out, how does that impact the way that you might try to build your company and the types of products that you launch, given that there's so much demand for different flavors of um, uh, expressing expectations for different price movements?
Yeah, thanks, Steve. I think Polymarket and prediction markets broadly are a very intuitive form factor for a lot of different investors and traders. It's really distilling markets down to a green button and a red button that, buy and sell and give you some implied probability of something happening. And you can take a stance on a pure event, something happening in the markets, in culture, in geopolitics, in political markets. And so essentially, I think that this makes it really easy for investors and traders to take a stance on a particular issue without, dealing with the cumbersome and arduous, process of trading options, which obviously we love options and our product is predicated on options, but it's quite complicated for a lot of investors and traders. And so Polymarket really distills that down into a very simple user experience. And I think this has been a very successful collaboration so far where our indices are tradable in the very, simple format of prediction market. And, typically if you're a retail investor in the US and you want to trade the VIX, you might need to trade the VIX options. And so that's much more complicated product. And it's really, it simplifies things to, to have a volatility index in a prediction market wrapper. And so I think that this unlocks, just a lot of, new product offerings for us, specifically making BVIV tradable on different tenors. We have 1 month and 1 year that are currently available on Polymarket, but I think that, there could be surface area to have shorter duration contracts that are, expiring in a matter of days. I think that as we create new indices, this is a really great medium for trading them and, commercializing them. And so I think that we think a lot about prediction markets, and it's a really great product that it's I liken it to the innovation of perpetuals, right? I mean, perpetuals really changed the landscape for crypto derivatives, and I believe that prediction markets is another generation of that with making it really easy to trade all sorts of assets. And so Polymarket's doing great work. There's a number of other exchanges doing great work in the space, and it seems like every day more and more incumbents kind of enter the prediction market space and have some plans to get involved there. And so I think it's we think a lot about perpetual futures and regulated mediums for trading our indices, but also prediction markets is becoming a pillar of sort of the go-to-market strategy. So it's something we're really excited about, and I think it's a great development.
All right, great. Well, we'll have to kind of stay tuned and keep watching it, because I agree. And there's a lot of exciting opportunities for someone like you, and then the products that you offer. So I'll have to keep watching there. And you mentioned perps. I think I'd be remiss not to at least acknowledge BidMax and the news that it was shutting down today. I mean, they essentially, I wouldn't necessarily say they created perps, but they definitely brought them to crypto, and nowadays perps dominate crypto derivatives. So it's a sad day for them, but they can clearly hold their heads high based on what they were able to create. We're gonna have to leave it there. Lots to cover, lots to continue watching. I'm going to pay particular attention to your 14-day time horizon, given how closely it lines up with the August recess for the Senate. Clarity still seems like it could go either way. I know Polymarket and some of the other prediction platforms have it at, I think, somewhere 30 to 40%. That'll change 8 times by the time someone listens to this on Apple Podcasts or Spotify. But a lot of work to do. Hopefully, we're going to see some positive movement, because I think it would be beneficial to everyone in the community. Cole, thank you for joining. Are there any last thoughts that you'd like to share with the audience?
Thanks, Steve. It's been great to be here. Thanks as always. And I would say check out our indices, charts.volmex Finance or Volmex Finance, are on TradingView, Bloomberg, Refinitiv, and let's see how Clarity, the August recess, evolves. And there might be some interesting moves in the market in Bitcoin and ETH and Solana and different tokens. So it's an exciting time, and look forward to next time.
Yeah, absolutely. Thank you to everybody for watching and listening today. That wraps up this week's episode of Bits and Bips, the interview. But come back again same time next week where we'll have another exciting guest. Have a good day.